Can I now? It seems like we've sort of talked through these to our heart's content. You seem sort of pretty bullish on sustainable finance, with one or two exceptions, and pretty sort of even-handed and measured on crypto, which is interesting. I wonder if that's the same as it would have been a couple of years ago. But can we now change to our next interview? Can I ask Tom Greenwood up to the stage? Tom is the CEO and co-founder of Volt. And he's going to be talking to me about open banking. Our question that we're going to be asking is, will open banking bring a financial revolution? Welcome, Tom. Do you own any crypto?
I don't actually.
Neither did I.
I've been waiting for regulation. Crypto is the Wild West, unfortunately. It's amazing technology. The fundamentals of blockchain are absolutely superb. But whenever you're moving money, and certainly other people's money, you need to have regulation, because otherwise there are bad actors. And of course, with the new sphere of regulated stablecoin and central bank digital currencies coming, I believe there's a new dawn for crypto, which will be upon us in the next year or two.
Well, that quite neatly brings us on to open banking, really, which is what we're here to talk about, and regulating moving money around. So, despite the title of our session, open banking is kind of a phrase that's bandied around a lot, and it means a lot of different things to different people. So perhaps I could ask you to start with what do we mean when we're talking about open banking? What are the sort of different areas it points to, and what are the sorts of things that it makes possible that weren't possible before?
Okay, I think what's important to first say about open banking is that open banking should not be the focus. Open banking is the hub of the bicycle wheel, if you like. The focus should be the use cases and the applications of that framework. What open banking allows for is the digitization of payments, which someone was speaking to about a few minutes ago, where we are bringing payments into the API economy, when we're making payments direct, real time, and modern. In China, and in India and the world's largest economies, they are already operating the demonstrable portion of their payments on APIs, which could be equivalent to the open banking standards that are being discussed in many countries around the world. But the two main use cases are for data and payments, right? Someone mentioned UPI earlier. UPI is a very successful payment system in India that runs on the APIs of the banks, effectively open banking, to be able to initiate payments directly account to account in real time. That is a form of open banking, a payments use case. In Brazil, an outstanding success story there has been Pix, which is the leading and dominant payment method there. So that's kind of the digitization and the real-time enablement of the payments infrastructure. Like when banks used to operate on a mainframe and they moved to an API economy, open banking is taking card schemes and archaic payment systems from 60, 70 years ago, and it is modernizing them to a real-time and a direct API-based payment instrument that moves funds directly account to account. On the other side of open banking, you have, and I'm mindful we've only got 25 minutes, so I'm going to try and speak more quickly. On the other side, you've got data, which is the ability for someone to be able to validate account ownership or to share certain account information from their bank account, which can be used for all sorts of use cases around identity and digital identity. It can also be used for validation of income or balance or financial health of any individual, as an example.
So those two obviously both very important aspects of the topic, but your and kind of Volt's expertise is in RTP, real time account to account payments. So I guess it's maybe a fair guess which side of that you think is most important. So you kind of explained it quite simply there and said, we've got this new ability to expand real-time payments, and that sounds like a small thing, but it's not a small thing at all, is it? It's actually quite rewiring how the global payment system works. So how, under that kind of seemingly small change, how is the global payments network changing? It used to be one or two big American card providers. Now it's this massive, diverse, very variegated network. What are the changes that are happening?
Yeah, I guess to relate my response here to my previous answer, it is that open banking framework and the digitization of payments that open banking enables, that then the consequential effect of that is the ability for any country and economy to then modernize its payment stack, right? So it's the application of that framework and the digitization of payments that then enables the progression of the payment stack and the modernization of it. But we're a very senior team of payments industry professionals at Fold. We're about 3.5 years into our journey, but my boss and our chairman was one of the founders of Adyen. They're one of the largest, most successful payments companies in the world, of course. We have the president of WorldPay on our board as a director. They're the world's largest merchant acquirer, and we have the CEO of Stripe also as a special advisor. So in such a period of transformative change, I wanted to ensure that I surrounded myself with the best people, and then Matt, Roberts, and Gabrielle, we've got 3 of the most senior payments industry executives globally, who I have the privilege of working with, not daily, but quite often. And what we're witnessing is Visa and MasterCard have obviously really dominated payments for e-commerce for many, many years. Their technical infrastructure was designed in 1955. It was first implemented by a bank in 1966. And in 2023, it is fundamentally the same as it was in 1955 when they designed it. That is the problem statement that all economies, all central banks, and all governments have, and banks, if they are in the medium term going to perceive that the world of payments is going to remain on a technical infrastructure and on a payment rail that was designed 70 years ago. The world's progressive economies do not agree that cards are the future of how money moves. China have really led the way in this regard with Alipay and WeChat Pay, which is a wallet system but an account-to-account payment instrument. India, I think, is the other outstanding example with UPI, and Brazil with Pix is an incredible example of also how they have really digitized and modernized their payment stack, and progressively UPI in India and Pix in Brazil are now the dominant payment methods in those markets. Brazilians don't pay with cards anymore. Indians don't pay with cards anymore. They are working on a future state digital real-time payments infrastructure that is account to account. What we're doing at Volt is we're recognizing, I suppose, that where historically Visa and MasterCard have had a single proprietary scheme, the new payments architecture is increasingly domestic. Governments and central banks and societies increasingly consider that the payments infrastructure is a matter of national concern. They no longer want to be reliant on with no disrespect to Visa or MasterCard or to America, they no longer want to be reliant on that American infrastructure or that American payment system. And so they are instituting, and there are 74 countries around the world currently rolling out their version of what we identify in Europe as being called open banking. But as we've mentioned, Brazil call it Pix, India call it UPI, Australia call it the new payments platform, Singapore call it Pay Now, and America, the Federal Reserve, have just announced Fed Now. So the silly analogy that I use when I'm trying to explain this is it's almost like having 50 of the world's best brain surgeons in the room together. They all speak different languages. They've all got different names, but they all do the same thing and fundamentally have the same expertise. And that's what we are seeing with the rise of real-time payment systems around the world. And so whilst this is a global movement and there are many countries addressing this modernization of their payment stack and progressing away from the cards infrastructure to the open banking and API infrastructure, it is inherently fragmented because it is inherently a domestic implementation. And so whilst they're all doing the same thing, they're all speaking different languages. So we see that fragmentation at Volt as being both a challenge and an opportunity, and we're building what we hope will become the world's first global real-time payments network by harmonizing to a single point of access and infrastructure these payment systems.
You've touched on quite a few, well, you've touched on lots of interesting points there. One that really struck me is that we sort of started out by talking about kind of old technology that allowed for very kind of slow, higher fee payments being replaced by newer, quicker payments. But then you brought in another aspect of this, which is that it's not just about making payments quicker, right? It's about countries the world over wanting to have their own system rather than, I mean, not unreasonably, but wanting to have their own system rather than depending on another country's system. Are there any other kind of risks you see in the old model that aren't necessarily to do with payments being slow, but just as you said, this is a stack that was designed in 1955. Are there any other risks that it poses?
I think risks is a strong word when you're talking about Visa and MasterCard. And just to be clear, I have nothing but admiration for those businesses and those teams and everything that they've built. But you can't get away from the fact that it's very old technology and it's ripe for disruption, and it is being disrupted. Different countries are taking this more seriously and are moving at different paces than others. But if you were to look at the world's largest economies like China and India, and America, they are pushing very hard on this agenda. I think governments increasingly understand that payment systems and the modernization of that payment stack is a governmental concern. They want control, and they want sovereign control over that infrastructure for their citizens and for their people. That hasn't been the case historically, but increasingly it is going forward. And why does that relate to open banking? Because it's the collaboration between fintech and bank, and it is the API infrastructure that unlocks that potential. And unlocks the monetization of that infrastructure. Where we're stuck a little bit at the moment is in the compliance arguments of what we should build and how and why, and that's politicized and difficult, and there's conflicts of opinion on that. But we'll get there for sure.
Now, your very vivid analogy, the 50 brain surgeons in one room, all talking different languages. Very vivid.
I explained it. My 6-year-old son said, "Daddy, what do you do?" That was the analogy that I came up with, so he could understand.
If you'll forgive me stretching the analogy maybe further than it was intended, sounds like a very risky operation. It sounds like a great scenario, but a very risky operation. So what do you think the main challenges in this transition are, and the main risks from this kind of new, more diverse world of payments?
I don't think there are inherent risks in either creating a sovereign payment system for your country or your people, or in the modernization of your payment stack. I think they are only opportunities. I think the challenges are in providing consistency of service, consistency of user experience, and conformity across many players. So there are centralized models and there are decentralized models, and different central banks and governments and regulators are taking different approaches in that respect. And I'm very familiar with some of the people that are involved with discussions in the GCC. And yeah, I mean, Bahrain was a trailblazer, and Saudi Arabia is a country that is growing its GDP faster than anywhere else in the world. The UAE is also very progressive. So really excited to become part of the conversation here as well, and contribute my voice if it's valued to some of the thinking that's going on. But the risks are that if you don't do it and you don't get it right, everyone else is doing it, and progressively they are getting it right. The risk is you'll get left behind, right? To my mind, real-time payments is the future of payments, and that's undeniable and without question. Not all countries will do things the same, and that is perfectly understood and perfectly okay, but whichever model it is that you're choosing, you do need to find a way to reach a common standard and a high level of service and consistent service and user experience to make sure that your citizens and your banks and your fintechs and everybody involved in the ecosystem can benefit and get the rewards of that innovation.
And if we're talking about sort of the development of many national payment system, what does that mean for cross-border payments? Are they getting harder or easier?
I was actually in Chicago last week, and I met the chief innovation officer of Swift. We didn't discuss this in our preparation, but it just occurred to me when you asked me the question. And Swift, of course, is the payment system that connects a lot of banks for interbank cross-border payment connectivity. And he mentioned that they were building an infrastructure for central bank digital currency interoperability, and that really interesting guy, actually. And I guess where cross-border is concerned, given the lens through which I see the world is that real time is the future of payments, I tend to lean towards the quite progressive and extensive discussions that are happening around regulating stablecoins. And also, there are over 100 central banks around the world that have either already implemented, in the case of China, Russia, and a few others, their central bank digital currency, or in the case of the Monetary Authority of Singapore and other big regulators around the world, like the Financial Conduct Authority in the UK and the Fed in America. It's a very big discussion point, and I think that where the future of cross-border is concerned, the challenges will be as nations increasingly move to a sovereign national real-time payment system. It'll be the interoperability, which is why I'm building what we're doing at Vault. Where cross-border real-time is concerned, I think just to that last discussion point, if I can have my own comment on that, I think crypto is getting a rough ride at the moment. I think FTX and other instances like that haven't helped anybody or haven't given it a good brand, but forget the word crypto and think about blockchain and the immutable ledger. That technology is phenomenal, and it is foundational, and it has a huge future. The issue with crypto has been that it's like a Western movie. It's new technology, it's evolving, it needs time to mature. Also, any banker that is here, any fintech that is here will know that in the world of fiat, whenever we are handling money, we need to be regulated. There are a lot of rules, there's a lot of compliance, there's a lot of requirements on us as directors and officers in these financial institutions. And if we get that wrong, we go to prison, right? Whereas crypto is a monetary instrument. And when you get it wrong, I mean, in the case of, unfortunately for Sam, he probably is heading in that direction, the FTX dude, but there hasn't been that framework and there hasn't been that regulation. And when you are moving money at all or holding money at all, that maturity of regulation is really essential. I think central banks and regulators and governments are catching up now, and I see a new dawn for crypto over the next sort of 2 years or so. I'm not trying to be a visionary or a mind reader here. It just seems to be the way that things are heading. And then there'll be a rebirth of a regulated stablecoin, which is controlled and conformed and meets all of the same regulatory requirements that for so long in financial services we've been complying to in fiat. And it's never made sense to me that a digital form of money should not be under the same auspices or control. But I think that that's now coming with the government regulations around it.
You mentioned in your answer they're both sort of stable coins and central bank digital currencies. Do you think it's a CBDC that could play that role, or how important are they?
I don't think there's going to be a consistent application of this globally. Like if you think about the American psyche, they believe in free enterprise and the free market, right? They don't believe in mandates. It's in their national anthem, the land of the free. And it's in their economy. If you look at how the American economy is and its success stories, it's private enterprise and partnership is how they build things. So it's arguable that in America, and again, I met the chief innovation officer of the Federal Reserve last week in Chicago as well, and she was commenting to me that she felt, given the American way of doing things, a CBDC may be less likely because it's a governmental standard and mandate, and that doesn't kind of work with the American thinking. I think it'll be some combination of CBDC or regulated stablecoin. The Americans may go regulated stablecoins, whereas Chinese CBDCs. But if you think about what a central bank digital currency is versus a CBDC, there isn't a huge amount of difference. They are pegged to either a basket of equities or to a country's currency price. So it's a bit too early to know exactly how that's going to play out, but there seems to be enough of a groundswell building that you can imagine that might come together.
That's a really interesting idea that what's actually needed is for there to be one or more than one digital stablecoin rather than for particularly it to be a central bank sponsored one. It could, as you say, it could be anything else as well.
You can get the same value out of a regulated stablecoin that you can a CBDC. There's nothing that you can't do with one that you can't do with the other.
Yeah.
And I think it would be foolish of me to suggest that all governments are going to agree to implement a CBDC. I just don't think that all governments are going to reach the same conclusion. I think that's unlikely. I don't have all the answers, and I'm not here trying to suggest that I do, but is digital currency in one form or another going to be a reality and in great circulation in most economies around the world 5 years from now? Yes.
So much for the sort of the difficulties and the logistics and the sort of challenges and risks. What do you think the biggest opportunities are that are being thrown up by developments in sort of payments as it relates to open banking, and sort of even maybe beyond there are obvious advantages in financial services, but what are the biggest sort of downstream advantages?
Well, for those in the room that perhaps are not familiar with cards and how we've been sending money over the last number of years, it takes a long time. You go into a store and you beep your card. So as a shopper, it's a real-time experience for you. But what actually that sets off is a chain link motion where money travels from issuer bank to the merchant's bank, eventually through an acquirer, through a PSP. There's 4 or 5 different intermediaries. And in the UK, anyway, where I'm from or where I live, I'm actually Australian. But in the UK where I live these days, it takes on average 4 days for those funds to arrive. If I give you the example of Brazil, on card rails until the introduction of PIX, it took on average 28 days for funds to move from your consumer bank account to the merchant bank account. Now, 28 days was the average. It varied from 90 days to 14 days. Now, with the introduction of PIX, which was about 3.5 years ago, and the digitization of their payment stack, PIX is now responsible for something like 7 out of 10 of all payments in Brazil, so 70% of all payment share. 28 days became 2 seconds. Card fraud was eliminated, and costs were reduced by 80%. And there is a tremendous benefit to GDP and to a country's economy. There is a tremendous benefit to embedded finance and the ability to be able to modernize your experiences and to be able to embed payments within the shopping experience. You may have heard people talk before about payments being invisible. You're just shopping online and the payment happens without you even necessarily being coherent of it. That's the future state. And well, that may be an element of the future state, but if you're still relying on card rails from 70 years ago, that's difficult to be able to kind of reap the benefits of that modernization unless you are building an API first and a real-time payment infrastructure. And it's clear to see already that the world is going real-time. So if you're not, you're getting left behind. And I guess that's provocative. It's intentionally provocative, but it's the truth. It's just the way things are headed.
I mean, 0 to 70% market share in Brazil in what, a matter of years. I guess it's what you're going to get if you reduce payments from 28 days to 2 seconds. But that's an astonishing change in the market dynamic, right? It implies that there's a lot of kind of...
I was in Mumbai, actually, in India, about a month ago, and I'm traveling way too much at the moment. I'm expecting a divorce at some point because my wife hasn't seen me. But I was in Mumbai about a month ago, and they did, in the month of September, 11.4 billion UPI payments in a single month. Mm-hmm. So that just shows the scale of, India's obviously a very large population, but 11.4 billion payments on their real-time payments infrastructure in a single month is a huge indicator of their success. And I think it's well documented in